Welcome to Markets Now. I'm Michelle Rook with John Heinberg with Total Farm Marketing. Well, a down day in the livestock futures. Grains were mostly lower except for the corn market. John, let's talk about corn. Impressive that we were able to hold that market together considering wheat was an anchor and was hitting new contract lows.
Yeah, the corn market is definitely in consolidation mode here over the last basically 7 trading sessions, bouncing between 420, 430, and really bouncing between a couple moving average, 10-day, 20-day moving average on that May contract. But I'm going to give it some credit here. We've had the wheat market just totally implode the last couple of days, and corn's just hanging tight. That just tells me maybe there's a little bit of money flow there. Maybe we've got some demand news. We'll see those export sales numbers tomorrow. Hopefully we're up over that million metric ton mark is where we need to be to get those sales on the books here in this window where, we're the most competitive or very competitive in terms of global prices. So I've been very pleased with the way the corn market's hanging in there. It'd be nice to see if we can get through the top side of this through that 430 in that March window. And then maybe we see a little bit more short covering going into that report here on Friday.
Yeah, that 20-day moving average really stopped us like a rock yesterday, didn't it?
Very much so. You can just tell there was some selling pressure. Maybe it's some farmers moving grain up there or just defending that short position by the funds, at that moving average. So that's why it might be a pretty key spot to get through. If we can cross through some of those highs from a couple days ago, you might see a pretty quick pop in the market as, some stops start firing up at that level. So again, that's the biggest thing I'm watching. We kind of poked at it a little bit at the end of the day today. We'll see if we can get up through that 430 area tomorrow and see if we can get a little momentum to the upside going into Friday's USDA numbers.
And what about the wheat market? New contract lows there again. We've had a lot of technical selling pressure, but there's a little more to it than that, isn't there?
Yeah, that technical selling kind of kicked in yesterday when we broke through those new lows, follow through today. And then we're hearing some rumors that China may be walking away from some of those earlier wheat purchases that they made back in the late fall here from U.S. wheat. So obviously that's something that's concerning. We'll see if those rumors validate themselves. But kind of looking at the spreads today, that move on the Chicago contract between the May and the July breaking another 7 cents today kind of tells you there might be some issues with front end demand, when we see that type of a push. So again, those rumors are tough when you're looking at a global wheat price situation that is making it very difficult for exporters to sell U.S. wheat. And then you get possible cancellation because of those cheaper prices. It's just going to push these prices even lower.
Yeah. Plus, you've got Russia selling at around $200 per metric tons. And so they're just selling at the lowest price they can find a buyer for, right?
Very much so. And then you're also watching what's going on in terms of the Ukraine and their wheat supplies, as well as what's coming out of Europe as well. All those prices all working again lower today, putting some pressure on this market. But right now, U.S. wheat is just struggling in the competitive front. Even though that's one of our areas that we just don't sell a lot of, we need to still have some type of sales and get that wheat moving.
Yeah. Soybeans, did we just see some Brazil hedge pressure today?
Yeah, I think the bean market's been holding in here actually fairly well, even though we're sliding a little bit again this week. But, we had a nice turn with the weekly close higher on Friday. First time we've done that in multiple weeks. Now we're still kind of just hanging in there, consolidating, pulling back a little bit. But I think that's hedge pressure coming in from Brazil. Obviously, they're about 50 to 60% maybe on that harvest right now. Their premiums are still significantly below the U.S. in terms of the export market, but that gap is narrowing. So that's a little bit of encouragement there. We'll see if those gaps can continue to narrow, maybe reflecting that tighter supply. But at least right here in the front end, it's just going to continue to be that hedge pressure from those South American beans, just making it difficult for this bean market to rally.
Speaking of Brazil, what are you expecting USDA to give us for numbers out of South America? Will we be disappointed again like we were in the last report?
That's going to probably be the biggest numbers this week on Friday's report are going to be what are the adjustments in South America. I'm not expecting a lot again. We'll probably see some marginal reductions, maybe 2-3 million metric tons, just to kind of maybe pull in line with what the private analysts are looking at. But again, the USDA will take their time. They'll continue to probably slow play that crop and not give the market what it really wants. But I think the market's going to discount those numbers very quickly and just kind of focus on what we see in the cash market with relating those U.S. beans versus those South American beans in terms of price.
Yeah. Anything you're expecting either on the corn or the wheat front in the WASD?
Wheat will probably stay relatively status quo. Again, maybe we'll watch a demand adjustment if there's some reason for that to happen. Watching corn, though, here, we've had a good ethanol grind. Export side of it has been fairly strong, at least in terms of where we need it to be. Always need a little bit more in that regard. Wouldn't be surprised we see some type of a demand adjustment that could help maybe bring that carry out down, but it's going to be a pretty minor adjustment. Not sure if it's going to move the needle a whole lot in the overall picture.
Yeah, going back to soybeans, are you concerned that USDA may adjust exports a little bit lower or not?
Yeah, that is a concerning point here, especially given the last few rounds of export sales that we've seen. And, we'll see what tomorrow morning or Thursday morning gives us on the next round with those reductions from some of those unknown destinations, even though we've shipped the tag to another, to China or wherever, we're still seeing those sales come in very low. That could just change the sentiment again in that soybean market, that we just don't have the demand we need. Even if it's just a minor increase in that carryout, it's still an increase nonetheless.
Yeah. So overall, the fund position, they've decreased their short length in the corn market, but added to it in soybeans. Looks like they're now adding back to it on the wheat market. Overall, do you get the sense that, they're done pushing the short side or not?
I would say at least maybe on the corn side in the short term here, that seems to be the move. Unfortunately, now they shaved 45,000 contracts off on last week's commitment of traders. Probably going to see a fairly big move again on this week's numbers. But the problem is corn market really hasn't put any rally together here. So that's a little bit disappointing in my mind, that'll give them some ammunition to roll this thing over again if the weather the news turns really negative. We'll have to see how things go as we're getting to the planting window. Feels like maybe they're moving out of some corn length and going into some wheat shortness here, just to kind of balance positions, especially given the way the two markets are acting.
Yeah. So, John, cattle market down today. Do you think the futures just got a little ahead of the cash here? Are we going to wait for that to catch up?
I think that's kind of what happened. You look at the historical levels, we're trading about $5, right now over the cash market. So that's just a little bit off in terms of the historical side. Cash trade this week, you haven't seen a whole lot develop. 182 bids I'm seeing out there. So if that's coming together, that'd still be another dollar down. Retail values, though, are looking good up, challenging 305, 306, even though we're a little softer today. So that cash trade is going to be the whole driver. And I think that's kind of why we're seeing the cattle market maybe just round off here and work a little bit sideways, just trying to get that need from the cash market to say, hey, this is the direction we want to go if cash can go ahead and push itself higher.
Yeah, charts really do look like we're pretty sideways there for the last few days. Hog market, we went and made new contract highs in the summer months yesterday. Today, we've kind of set back here. Is the futures board getting ahead of the index again here, do you think, just like we're seeing in cattle?
Kind of feels that way, especially in those summer months. And, we had a pretty difficult reversal on the close yesterday, some follow through today. You get up over that 100 level like we are for June, July, and, in August, probably a window that producers want to make sure we're building some flooring underneath that market because it can move quickly. Cash index still around 80, April futures around 85. So that gap needs to narrow. And we're seeing that come out a little bit here. The cash market or the hog market overall, it's just kind of looks like it's had a pretty good run. Might be a point here where we see some correction to the downside just because of the distance that we've traveled since we started this the first of the year.
Yeah, the hogs have definitely performed above expectations, haven't they?
Yeah, they have, especially given some of the numbers that we saw out there in the quarterly hogs and pigs report and the productivity that we've got in terms of these hog numbers that are out there.
No doubt. Thanks for joining us, John Heinberg with Total Farm Marketing. That's Markets Now.